Yes, sir, I'm settled. You can start the recording.
ठीक है, okay मैम.
Don't forget to take the attendance as well. Good morning, students. Yesterday we have discussed the format of cash flow statement, that how the activities are to be divided in three categories, that is operating activity, investing activity, and financing activity. And after that, it is to be added all together. By adding the opening balance of cash, we will get the closing balance of cash and equivalent to cash. In this way, we will get the answer of cash flow statement. Today, we will do the practical numericals related to the various activities. Let's start with the operating activity first. It is floating on the screen, illustration number 6. Calculate the cash from operating activity from the following balances. Here a statement is given to us in which all the current assets and liabilities are given to us, and operating profit before working capital changes is also given to us. If you look at the solution part, I hope you remember, whenever the operating profit comes to you before working capital changes, after that the changes take place in working capital are to be added and subtracted out of operating profit, and we come to know that what is the net cash used or from operating activities we get. So in this question, see, the net profit before the working capital changes is given to us. Here the current assets and current liability are also given to us for the 2 years, that is year 2018 and 2019. By comparing the figures of both of the year, we can find out whether the assets are increasing or decreasing, whether liability are increasing or decreasing, and accordingly what will be the effect take place on working capital, and we have to show that effect in the solution as it is done here. See, operating profit before working capital changes, that is 1 lakh, that is given to us in the question. Add, as the current assets are decreasing, which current assets are decreasing? Debtors are decreasing by 20,000, while the prepaid expenses are also decreasing by 200 rupees. So we have to add the current assets. As I told you yesterday, the basic rules and the logics to do this. And increase in current liability, that is our creditors and outstanding expense. Creditors are increasing by 5,000 rupees, while the outstanding expense are increasing by 500 rupees. In this way, we have to add those increase in current liabilities as well. By adding the decrease in current assets and increasing in current liability, we will get the balance, that is 1,25,700. Now increase in current assets, that is increase in bills receivable and accrued income, is to be deducted, and decrease in current liability, that is decrease in bills payable and income received in advance, it is also to be deducted. By deducting those terms, we will get the net cash from the operating activities. In this way, we can get the operating profit, net operating profit from the operating activities. But in this question, don't forget, the operating profit before working capital changes are given to us. We have to treat the working capital only in this. Let's see, different type of information is given to us, then how it is to be tackled. See, in illustration number 7, the information is given to us that the X Limited made a profit of rupees 5 lakh after considering the following items. These items has been considered in the profit while calculating it. What are these? That is goodwill written off, means amortization of the tangible assets, intangible assets, depreciation on fixed tangible assets, loss on sale of fixed tangible assets, provision for doubtful debts, gain on sale of fixed tangible assets, that is land. The additional information that is related to our current assets and current liability is given to us. You are required to calculate the cash from operating activity. See how. Now in this question, the net profit before tax, that is rupees 5 lakh. All above it is given in the statement. You have to put the net profit before tax. Now whatever the adjustments are to be made, like the goodwill written off, depreciation written off, loss on sale of tangible assets, and provision for doubtful debts, it is to be added back, as we have discussed in previous topic, while discussing the format. As per those rules, as per those basic concepts, these are the items are. If still you have any doubt that why this item is to be added, you can ask in the query session. Please note down your query and you can ask them. Then deduct the gain on loss, gain on sale of fixed tangible assets. After that, we will get the operating profit before working capital changes. Please don't forget, we got this operating profit which do not include the treatment of working capital changes. It includes the treatment of the non-cash and non-operating item till the time. So now we have to operate or give the treatment to the current assets and current liability, add increase in current liability, less increase in current assets, less decrease in current liability. Whatever the information is given to us, on the basis of that, we have to make the changes of working capital. In this way, by treating all these terms, we will get the net balance, that is cash from operating activity. Here now note is given to us that calculating cash from operating activities, provision for doubtful debt is added back to the net profit before creation of provision does not result outflow of cash, because it is a non-cash item, so it is to be added back. See, eighth question is also very much similar to that. You have to do this problem yourself. Here are some important notes to remember are given to us. Let's discuss it. While solving a question, the net profit before tax is written off. First of all, while solving the question, the net profit before tax is written first of all. For the calculation of net profit before tax, usually which items are to be considered? Please keep these 4 items in your mind always, because whenever the net profit after tax is given to you, it means you have to calculate the net profit before tax. I hope you are getting the point what we are discussing. Whenever in the question the net profit after tax is given to us, you have to calculate the net profit before tax by adding these 4 items. Out of these 4 items, whatever is given to you in the question, it is to be added back in net profit after tax. Then you will get net profit before tax. See, net profit after tax was given to us. You have to add provision for income tax made during the year. You have to add proposed dividend of the previous year, interim dividend paid to the shareholder, and whatever the amount of the profit that is transferred to general reserve or any other reserve during the year is also to be added back. By adding these items back in the net profit before after tax, we will get the value of net profit before tax. See how it is to be done practically. Just look at illustration number 9, then it will be more clear. The profit of the Philips Limited after appropriation means it is the profit of profit and loss appropriation account, means after the appropriation, after paying the tax, after return of the provisions, all this dividend has been paid out of that, means appropriating, after distributing the profit, then profit is left with us, that is 2,50,000. The profit arrived after taking into consideration the following items. What are these? This is the depreciation of fixed tangible asset, loss on sale of fixed tangible assets, that is furniture, goodwill written off, that is amortization of intangible asset, provision for taxation, the amount is transferred to general reserve as well, and some gain on sale of land of fixed asset, that is machinery as well. Some additional information in which the current assets and current liabilities value of 2 years are given to us. With the help of this, we can identify that what are the changes take place in working capital, and we can put those changes in the solution, and finally we will get the net cash from operating activity. Let's start the question. Come to the solution part. The net profit before tax is given to us. It is 3,20,500, means 3,02,500. Now, adjustment of non-cash item and non-operating items is to be done. How the adjustments of non-cash and non-operating item is to be done? First of all, the depreciation is to be added back. that is 20,000. I hope it is clear to you. You kept the books with you, or you can see on the screen. Here the depreciation, the first item is given to us, it is added back. Loss on sale of its tangible asset, that is also added back. Goodwill written off. Provision for taxation and transfer to general reserve. All these items are to be added back. After adding these items, we have to deduct the gain on sale of machinery. Whatever the gain on sale of machinery, it is to be deducted. We will get the net profit before working capital changes. What we will get? We will get net profit before working capital changes. Now, we have to identify that what are the changes take place in working capital. Decrease in current asset, that is inventory. Increase in current liability, that is increase in trade payables. Increase in current asset will be deducted, that is increase in the value of trade receivable, that is 12,000. Prepaid expense 5,000. Decrease in current liability 3,000. That is outstanding expense and income received in advance. Income received in advance means the prepaid expense. Loans and advances we can say. So these are to be added as well as deducted. After operating these terms, we will get the operating profit or the net profit. The same thing is this, before working capital changes. What will we get? We got, before treating these items, we got working capital, net profit before working capital changes. Now, after treating those items, what we will get? We will get the cash generated from operating activities. So, what is the cash generated from operating activities? It is 3,11,500. Tax has been paid out of that, and finally, we will get the cash flow from operating activities. In this way, a full-fledged question related to operating activity is to be done. In this way, full-fledged question not related to cash flow statement completely, only a small part, that is the calculation of cash flow from operating activities, is to be treated in this case. See, here the net profit before tax is to be calculated. How it is to be calculated? It is given in the working note. You can see the net profit before tax. It is net profit after appropriation is given to us. We have to add provision for tax and we have to add general reserve in that. And we will get finally the net profit before tax. And you have to assume that whatever the provision for taxation is made, the payment is done during the year, whatever the provision has been made. This was a full-fledged question, and there are so many questions, next questions you find, that is related to the calculation of operating profits. You have to complete your questions up to 15 and feel free anytime to send your queries. Now I request sir to stop the recording.